A wonderful good morning here from the Prime XPT trading studio of our training academy. My name is Dirk Hartig. I'm the head of trading education here at primexpt.com, and I also have the honor of being your host today. So in today's episode, we would like not only to talk about what is currently going on with Bitcoin and what to expect for the upcoming days and maybe weeks. We also want to have a look at some altcoins, or the altcoin cryptosphere, I like to call it in general, to see and get a feeling for, is an investment in altcoins really worth your money? Or should we put everything in Ethereum and Bitcoin because those are the largest stocks out there? So stay with us here. We have put some really great content for you together today. And as always, the whole thing probably is going to take around half hour, 25 minutes. If you have any questions and you're watching live at the moment, feel free to drop us a message in the chat. Alternatively, you can, of course, also get in touch with the Trading Academy by email under academy@primexpt.com. And yeah, our promise is we will, of course, answer every single message. And if your message or your question is asked by a lot of people, of course, we're going to cover your question then also live here in our show 3 times a week, the crypto show, Tuesdays, Wednesdays, and Thursdays. So I have my most important utensil for the morning already with me, my coffee. So cheers to you. Before we start, as always, guys, we have to do this, the risk disclaimer. This webinar is brought to you and provided by the Prime XPT research team. And this is educational content. This is not financial advice. Our mission really is here as professional traders to give you education to the like that one day in the future, in the not too far future, you are able to make better and well-informed trading decisions. So it's always important that you also on top do your own due diligence, please. First thing I always like to look at is the fear and greed index in the morning for Bitcoin, but I think it hasn't been updated today yet. It hasn't. The one for Ethereum has. So the one for Bitcoin is still the one from yesterday where we were at extreme greed. I don't think much has changed there probably. So we came down yesterday a little bit. And if you watched the show yesterday, I said this is really what I was expecting. I was expecting that, as to be honest, a little bit earlier already. But it happened yesterday, so we were not able to regain this area of 50,000 here. So prices moved lower a little bit into the area of 48,000. Now we are a little bit under 40,000, under 48,000 again. And I said it yesterday, I'll say it again. If we consolidate back into this area where the 200-day moving average is here, so roughly around, let me show you this, around 46,000. This is really, really just healthy for the market, because in all those years I've been doing this, I've learned that the higher something rises, the more severe normally the correction will be. And this is especially true for Bitcoin. So when you see something rising by 50%, by 60%, by 100%, or even a couple of 100%, you can be very sure that eventually you see a correction of 20, 30, 50%. And of course, if you are trading, if maybe you are also using leverage for trading, you don't want to be caught in a long position then and then thrown out just because of a small correction. Now, don't get me wrong. Of course, something like a 20, 30, 40% correction is not considered small. But in the grand scheme of price development of especially Bitcoin, it is considered, of course, a small correction. So my favorite scenario really for the next days is that we are maybe even going a little bit lower. Maybe we are not, because it seems like there is demand in the market at these prices still. And if you watched yesterday, we were looking at how the behavior of so-called whales is out there. So whales, Bitcoin addresses, Bitcoin wallet addresses that contain a large amount of Bitcoin are usually considered as whales because their behavior has a large impact on the market. And at the moment, we still see those addresses buying. And this is the difference to when we were last at around 50,000 back then in April, May. Back then, you only saw, or you, in the majority, you saw the smaller addresses, so-called fish buying. So it's everything is still quite healthy, but we are overdue for a little bit of downside reactions, just going to be healthy for the market. So my favorite scenario really is that we kind of start oscillating around this area a bit, maybe for a couple of days, maybe even for a week or 2 or 3. So the whole market can calm down a little bit again. The sentiment we are seeing at the moment in the extreme greed levels is coming down to maybe even a neutral sentiment again. That would be very healthy. And then we would be really prepared for eventually another leg up to, who knows, to attack maybe the all-time highs or even go higher this year still. So I want to take the opportunity of Bitcoin consolidating today to have a look at some other markets out there, or at some other coins, because obviously, I mean, Bitcoin was obviously the first cryptocurrency. It's the largest cryptocurrency still by far. But there are other projects out there that also seem to be attracting a lot of media attention, seem to be attracting a lot of money, that had phenomenal developments in prices. One of them, for example, being ADA. And I would like to put a little bit of a general perspective on that and try to look into why an altcoin investment is always at this state of a market a bit more risky than a Bitcoin investment or an Ethereum investment, which obviously are also risky. Don't get me wrong on this. And there's no such thing like a straight line up and guaranteed returns. And we see here, and I'm using CoinMarketCap now for this. This is the current state of a market. So, of course, we see here Bitcoin on number one. Then we have Ethereum there for sure, Ripple. So all the usual suspects. We have Cardano, short ADA here, who also had a phenomenal last 7 days with plus 35.8%. We have something like Dogecoin also, Polkadot, Solana. And those are projects, if you turn back the clock 4 years. We are now going to look at 2017, August 2017 to be more precise, for 27th August of 2017. And we want to have a look here at two things. We want to see what were the coins in the top 10 by market capitalization then, and what happened to those coins. So are they still in the top 10? If they are not in the top 10, where are they now? And what might be the reason for that? And from that, we want to kind of, in a thought or build a hypothesis, what could happen to some of those coins we see nowadays in the top 10 or maybe top 20, top 30. So the more new projects that weren't around 4 years ago. And 4 years really is not such a long time period. And I choose this on purpose, obviously, 4 years, because, you know, the Bitcoin halving cycle is always 4 years. So roughly every 4 years, the supply of Bitcoin generated by mining every 10 minutes is cut in half. And if you look at the Bitcoin charts, you can very well also see those 4-year cycles in price action. So that for a reason. So let's have a look. Back then, of course, still Bitcoin at number one, which is still at number one. But look at this. Back then, and that was obviously before we had those huge bull runs up to almost 20,000 in December 2017. Bitcoin had a market capitalization of 72.5 billion US dollars. And we are now at 900 billion. We were over a trillion already. I think the trillion is reached around about 53,000 again. So that's more than tenfolded up in market capitalization, obviously also more than tenfold up the price. So that would have been quite a decent investment for 4 years to make 1,000%. We had Ethereum. We have Ethereum still here, number one. Also, market capitalization has been tenfolded. So roughly the same performance you saw from Bitcoin in the past years. We used to have Bitcoin Cash, which we do not find in the top 10 anymore. We find Bitcoin Cash now at place 13 with a market cap of 12.3 billion. And back then the market cap was at 10.2 billion. So the price was $620. Price nowadays is $645. That is not such a good development. And you can see how large the differences in market cap between number 1 or number 2 and number 13 on this list of market capitalization already is. 12 billion compared to 900 billion, or 13 billion. No, well, it's 12 billion compared to 900 billion. So this is like, what is that? It's not 100. What is that? Like 90 times roughly the market capitalization in difference. So one might get the suspicion that the development of a market capitalization says something about the healthiness of that cryptocurrency. We had something back then, Litecoin, here with a market cap of 3.2 billion. Litecoin, where do we find Litecoin now? Litecoin, 11.8 billion, the price of $175. Back when a price of $61. So, okay, that has had actually quite a nice development already, nothing wrong with this, but it's not in the top 10 anymore. And the top 10 are the ones people are looking at. We had Dash. Dash, I think you have to scroll down by quite a bit already. I think I saw it somewhere in the 30s there, or maybe even 40s. You know what? We can also use the search function here. So Dash is ranked 49 currently of the coin market cap. 49. So we have to scroll down. And by the way, Dash is a fork, or used to be a fork of Bitcoin to make Bitcoin more private. I don't know why they called it Dash though. So price $251. Back then, price of Dash $362. So if you would have been invested in this, you would have lost money actually already. Iota also, I remember, very, very big, very hyped because that project, I think, stems from Berlin. So that's my hometown, Berlin, and was very hyped around here. Let's see where Iota is now. Iota. Here we go. Iota at rank 45. And again, let's look at the price there. The price $1.06, and it used to be we still would have earned some money there. Okay, to be fair, but I mean, if you're not investing in cryptocurrencies and holding them for a long time to have a return of what is that, like 10% over the course of 4 years. Of course, you're looking for returns of like 30, 40, 50% a year minimum. And then we have other projects, then NEM, NEO, who you also still find in the top 50. But if you compare like what happened to those projects, and the top 10, obviously, like nowadays, were the project that were promising, that were the hot stuff, so to say, back then, you see now that nobody's really talking that much anymore about those projects, with the exception of Bitcoin Cash a little bit, with the exception of Litecoin, that has gotten quite a lot of coverage on Twitter lately. And if you go down here and you find things like BitConnect, which turned out to be a fraud, by the way, there's a multitude of those projects that were, especially during that phase of so-called ICOs, initial coin offerings back then, hyped to be the next Bitcoin, to be the next Ethereum, but they failed, or the project is kind of lingering around, but not really going anywhere anymore. And I haven't looked like much into details now on Iota, on NEM, on NEO, and so on and so forth, how the projects are doing currently. So I might be totally wrong, of course, but just considering by market capitalization, by price development in the last 4 years, I think it's safe to say there hasn't been going on very much, and those would have been not very great investments. Some of them would have lost you even money. And why am I showing this to you? Because we are getting a lot of questions. I have a lot of people in my network. I have a lot of friends who keep asking me about cryptocurrencies like Cardano, cryptocurrencies like Dogecoin, especially also Polkadot, Solana, Uniswap, and so on and so forth. You can really go through the list here until maybe number 50. And people ask about this. And why do they ask about this? Normally not because they go into a deep dive to really have a look at, okay, what is this project actually doing? Is it solving or trying to solve an issue that needs to be addressed? So is it doing something new, something that hasn't been done before? Is it solving a problem? Or is it just trying to be the next Bitcoin? And this is what most of the investors out there have in the back of their mind. They feel like they've missed the train on Bitcoin or Ethereum, and now they are looking for something that is still new, but where they hope that it will be the next Bitcoin, where they hope that they can get those tens of thousands of percent of return in just a couple of years. And I see this nowadays. I see this again. I see it exactly, and the behavior of a lot of so-called retail investors out there is exactly the same like back then. And it doesn't have to be, in my opinion, because if you look at where was Bitcoin 4 years ago, yeah, at 4,400, whereas Bitcoin right now, at 48,000, that would have been an amazing investment. And almost no other cryptocurrency out there would have been able to beat this. Actually, I don't think any other cryptocurrencies would have been able to beat this. If you also look, where was Ethereum back then? Ethereum was at $350. Ethereum now is at $3,200. Also a great investment. So, and we need to have a look at why is that so? Why is it so difficult for projects out there, for great projects like Cardano, for example? I absolutely think this is a great project, but why is it still so difficult to try to push Ethereum, Bitcoin from the throne? And this is, in my opinion, due to something called in marketing, in economics, the network effect. And to explain this, I would like to have first a look at how how different the hash rates for cryptocurrencies are. Now, I have to be careful there not to compare Apple with peers, because the hash rate, the consensus for Bitcoin is a different one than, for example, for Ethereum. Bitcoin works by a protocol called proof of work. What that is, we are going to go into more details in a later show. No worries about this. Ethereum is using a consensus called proof of stake at the moment. Same with Cardano, same with Binance Coin, and so on and so forth. And so you cannot really compare the network capacity of, for example, Bitcoin with Ethereum. This is very important. But what we can compare, for example, something like Bitcoin in comparison to Dogecoin, in comparison to Bitcoin Cash, because they all use the same consensus algorithm, which is called proof of work. And what you see here is, and this is not including Bitcoin right now, also is that in this case, Bitcoin Cash has the highest hash rate at the moment, with 1.5 exahashes. Now, exahashes is a one with 18 zeros after this. So this is called a quintillion, I believe. And if I now put in Bitcoin for comparison, and I'm not using a logarithmic chart because the linear chart makes it more. You see Bitcoin at the moment at a hash rate of around about 120 exahashes. So that's, in comparison, that's over 100 times more powerful, more strong, more than the second largest proof of work algorithm, which is Bitcoin Cash. And you can see in a chart like this, the other ones don't even appear here. Those are those lines down there. And why is that important? Because this shows that Bitcoin has an advantage over other cryptocurrencies that use the same consensus proof of work, because the network is so much larger. And there's a definition for this in economics called the network effect. And I'm just going to read this a little bit for you, and then we're going to talk about what that really means and what that means for, especially for further price development, also in comparison to what you probably can expect from your average altcoin. So the network effect is a phenomenon whereby increased number of people or participants improve the value of a good or service. The internet is an example of a network effect. Initially, there were few users on the internet since it was of little value to anybody outside of the military and some research scientists. So this is really important. So the network effect says when you have a network, the more people participate in the network, the more value it will gain. And there are real life examples out there for us every day where we see this effect. So the internet is being one. And if you're as old as me, you might still remember there was a time without internet. So back then, 1994, 1995, I was still using those crazy modems that made sounds and occupied your telephone line when you were connecting to the internet. Everything very basic, took ages to load a page or graphic. Something like we are doing here, streaming, was considered to be impossible because it was considered to not be scalable, and so on and so forth. Over time, more and more and more people started using the internet, so it became more valuable. It became of economic power, really, for the world. I mean, nowadays, I really cannot think of any business out there, or almost any business, that is not dependent, at least in some areas, on customers getting in touch over with the internet or utilizing this network effect. And a very, very popular example for this network effect is Facebook. So before Facebook, there were, I think, MySpace and other social networks. But when Facebook came eventually, you had a very hard time finding somebody that is not on Facebook. And so Facebook gained its value by so many users using it. Believe it or not, if you have not seen this movie, The Social Networks, go and see it. Of course, it's a movie, but the general message is, yeah, there was no revenue, like calculation or before Bitcoin and still Bitcoin, sorry, and still Facebook was already worth a lot of money. Because they used the large network they built then to use it for advertisement. They knew, they still know what your interests are if you haven't turned that off there. So they have valuable information for everybody out there. And almost nobody that tries to sell goods and services nowadays over the internet can afford not to use advertising on Facebook. So this is a very good example of the network effect. And that's the same we are seeing on Bitcoin. This is also the same, at least to in some parts, that we are seeing on Ethereum. They have reached this. This is defined as a critical mass where the network is so big that it's for new people in coming into this area almost impossible to ignore them. So if you want to build up the same decentralized network that Bitcoin nowadays has, well, I mean, you would have to invest a lot of money, and you can actually kind of calculate what you would need to invest to have the same size of hashes per second calculated. And now you've probably all heard of mining, and I looked here how at Bitmain, who is a manufacturer of those mining rigs, and like the biggest one you can currently buy is called the Antminer S19 Pro, and this one it cost 14,200 euro. And has a hash rate of 110 terahashes. Now remember, 1 tera, so that's one with 12 zeros, if I'm not mistaken. So in order to get the same network power you are currently having from Bitcoin, and don't nail me now on the decimal completely there, I'm trying to calculate this in my head, you would need around about 100,000 units of this Antminer. So 100,000 times 14,200. And if I'm not mistaken, so you would need to invest, what is that, around about 1.4 billion euro. just to get the same networking power. And this is not even taking in consideration the space you would need for 100,000 units and the electricity consumption and so on and so forth. And probably it's also not possible to buy 100,000 units because those needs to be produced, and I don't think they have 100,000 units on stock for you to buy, even if you have this money. So in order to build the same network really from the scratch with the same computing power, you would need to invest 1.5 billion euro just for the hardware. Crazy, isn't it? So this is how powerful the Bitcoin network is already, and this is why Bitcoin, or this is parts of the reason why Bitcoin has an advantage, still an advantage over other cryptocurrencies, because Bitcoin was not only the first, but also had the most time to build up the network power to get to this critical mass and utilize this network effect. And I know this is very abstract, this whole concept, but I want you to keep in the back of your head, if you, for example, are thinking of buying cryptocurrencies and of holding cryptocurrencies long term. So we're not talking about trading here. We're talking about buying and putting them somewhere in cold storage on your paper wallet, on your hardware wallet for 5 years, for 10 years. Keep in the back of the head what altcoin needs to accomplish just to get to the same level where Bitcoin and Ethereum are currently in terms of computing power. It's insane, the investments that would need to be done. And I'm not saying this is not possible, but if you want to do it in a smart way, in my opinion, you can try to do it like a professional investor. Professional investors saying something like, for example, okay, if I have 10,000 euro, I'm not going to put 10,000 euro in altcoin. Maybe I put 8,000 in Bitcoin or Ethereum, and 2,000 I put in a promising altcoin project for a long time. And maybe this is Cardano. Maybe this is something from down here, Aave, Pancake Swap, or whatever. I'm not like familiar, of course, with every altcoin project out there. Nonetheless, in the future, we are of course going to cover more of those altcoins and look a little bit under the hood at the engine to get a feeling, are they really solving problems, or are they instruments that maybe are better for trading than for long-term investing? Yeah, this is about it for today. So we are going to see each other again tomorrow. And for sure, we are going to talk a little bit more again about trading in Bitcoin and Ethereum. And so let's see first how things are developing here price-wise. To summarize things on the current state of Bitcoin again, I would like to see personally that we are going to stay in this area or even go a little bit lower to the area around the 200-day moving average, because it would be healthy for the sentiment to slow down a little bit, for institutional investors out there to reposition themselves and then see the strong break out to the north, which personally I'm still expecting. But please, this is just my personal opinion. Please always do your own due diligence. This is very important that you take your own learnings away. But maybe I could shed a little bit of light on what the altcoin market currently is doing and why investing everything in an altcoin might not necessarily in the long run be the smartest idea, because of this network effect and because of the comparison of where Bitcoin and Ethereum price-wise were 4 years ago and where they are today. If you're not doing so already, please follow us also on Twitter under px_academy. And as I said, also, you can get in touch under academy@primexpt.com. And most important, if you have not done that already, so claim your 50% deposit bonus as an Academy member. Go to margin account on your Prime XPT account and type in the promo code Trading Academy, all capital letters. Then you will get a 50% deposit bonus on all your deposits until I think it's October. And if you are not trading with Prime XPT already and would like to become a preferred member of Prime XPT, use our sign-up links here underneath Twitch, underneath YouTube to sign up. That way, automatically, you will be tagged as a student of a Prime XPT training academy and thus get some special services and priority answer to your questions, of course, from us. This is all for today. Please stay safe out there. Always use the stop loss. And I will see you again tomorrow at 10 a.m. CT for the next episode of That Crypto Show. Goodbye and take care.